So today I'm going to talk about my own trading journey and how I went from being a part-time trader to a full-time trader. A lot of you have been asking me this question, and for me, it's been a long journey of 10 years, where for 8 years I was trading part-time before finally going full-time 2 years ago. And let me share with you what the differences are, what the reality is like, and what criteria I used before making the decision of when and if I should go full time. So, in my experience in the last 10 years of trading, there are two types of traders. The first are hobby traders who just like trading part time and they're doing it for fun and they put in very little effort into learning. They treat it more like gambling and they're doing it more for the thrill of it. They get a kick out of it. And the biggest tell for me is that they do not track their results. Uh, as a result of that, their results are very random and their equity curve looks much like an ECG. So it goes like this. Their drawdowns are large. They'll often make 5% on the account, lose 5%, make 10%, lose 10%, and the results are in the end very random and go nowhere. Now, real traders, on the other hand, they are traders who trade full time or at least are looking to go full time. They want to do it to make money. They're not in for the thrill of it or for the emotional kick that it gives them or the high that it gives them. They use their trading profits to pay their bills. And because they're doing this seriously, they put in a lot of time and effort into learning. And by a lot, I mean years. The biggest tell for me, if someone is a real trader, is if he tracks his trades. And usually, as a result of tracking every trade, a real trader will have a very smooth equity curve. They also have drawdowns, but these drawdowns will usually be just 5 to 7%, and at most they will be 10%, never more than that. And they quickly recover their equity curve to new highs and keep it going straight up or flatlining sideways, but never going down steeply. Okay. So, what criteria did I use before I decided to transition from a part-time trader to a full-time trader? So I was definitely in the second camp, and I was a real trader, a serious trader. I wanted to do this for a living. I've always had the passion for this ever since I took my first trade about 10 years ago. And I also come from a trading family where my father, my mother, my brother, and even up to my great grandfather were all traders. And so I guess this was just always in my genes, and I took to it like a fish to water. But before I decided to jump into it full time, I had two main criteria. So a lot of you have asked me this, how I accomplished this, and they've told me that you were never successful enough to make it your full-time job. So if you find yourself in the same position as Range Pro, then see if these criteria make sense to you and use this as your benchmark for when and if you should go full-time. So the first criteria for me is having a positive expectancy. Now, positive expectancy is basically a formula that calculates your average win into your percentage of winning trades minus your average loss and your percentage of losing trades. I'll also show you what my stats really are like. But basically, you need to calculate these for your last 100 trades or the trades over a year, and you can choose the period that makes most sense to you based on your trading style and your average holding period. But for me, I just like to know these stats on a rolling basis for my last 100 trades to know if I'm maintaining my edge or not. And what it basically will tell you is if you have a proven business model or not. So once you have this, And especially if you've tested it out in a bear market like right now, and you have a positive expectancy, as in this formula gives you a positive number, that means you have a proven business model and you can quickly scale it to become a full-time trader. Now, these are the stats, and I just took a screenshot from my own Excel sheet where I calculate these on a rolling basis for my last 100 trades. And don't worry, I'm going to do a video on my Excel sheet and how you can make the same one. So stay tuned for that, but let me just explain what these numbers are for now. So this is my average win, AW. What this tells me is for all my winning trades, on average, I make a 10% return, 10.3% to be exact. Now this is my average loss. And what this tells me is for all my losing trades, on average, I lose about 4.4%. PWT is my percentage of winning trades, And what this means is what percent of my trades end up being winners or end up making me money. And as you can see for my last 100 trades, this number is 37%. This number will change based on the market environment. So in a bear market, it's common for me to have a percentage of winning trades somewhere between 35 and 40%, sometimes even down to 30% if the market is really, really bad or my trading is really, really bad. But in a bull market, this number will usually be above 40% and somewhere closer to 50, 55%. And that's when I'll make my most money as a swing trader as well. Now, the percentage of losing trades is just 1 minus this. So that's 63%. And RR is basically my risk reward ratio. What this tells me is it basically calculates this number, my average win, divided by my average loss. So in this case, for my numbers, it is 10.3 divided by 4.4, which is 2.4. And my expected return is what I defined as positive expectancy here. And the formula for this is exactly this. So my expected return is 1.1%. So what it means is that the next trade that I take, I am expected to make 1.1% on that trade based on my past 100 trades. Now, since this is positive for me, what it means is I have a proven business model, as in I have a formula for making money. And when I enter a trade, I am more likely to make money than to lose money. And on average, I will make 1.1% return on that trade. If this number ends up being negative for you, that means you do not have a proven business model and you need to go back to the drawing board and figure out how you can fix either your entries, your exits, your position sizing, your setup, your SA, troubleshoot what's going wrong, keep trading until you have a large enough sample size where this number turns out to be positive. It's simply telling me that if I operate my business, I am making money. If this number is negative, that means for every day that you are operating your business, you are losing money. Think of it as a company that is burning cash on a daily basis or a monthly basis. If you find yourself in that position as a trader, then you want to stop trading completely or stop trading with real money and paper trade until, or go back to the drawing board and troubleshoot exactly what is happening and only start putting real dollars into the market once you have a positive return. Okay, positive expected return. Okay, so that was my first criteria. And just to reiterate, be sure that you test this across different markets, especially in bear markets or choppy markets, because everyone is going to have an expected positive return. In a bull market, literally, you could randomly enter stocks and they are more likely to go up than not. So don't confuse brains with a bull market. It's best that you test this out during a challenging environment. And if your portfolio can still withstand a bear market and make money, then yes, you have a positive expectancy. You have a legitimate business model that makes money whenever it's operating, and your first criteria is fulfilled. Now, the next criteria, 5 years living expenses. Now, this is super crucial and will save you a lot of stress, anxiety, depression, heartache in the future if you do decide to go full time. Now, before I went full time, I wanted to make sure I have enough savings with me that I can cover 5 years of living expenses at my current standard of living in the city that I'm currently living in, which is New York. So this amount will be different for you based on wherever in the world you live and whatever your standard of living is and what your expenses are. But calculate them for a year, multiply it by 5, and make sure you can at least maintain that life for the next 5 years. And the reason this is so important is so that it makes sure that you're not trading from a place of desperation. If I don't have savings in my bank and I need to make money from my trading just to go buy groceries for my kid tomorrow, I am going to be trading from a place of desperation and not making sound decisions. Also, this will make sure you don't have stress. You're not worrying about your day-to-day bills or how you're going to pay your next month's rent. And trust me, no amount of money or nothing in life is worth the stress. Also, this will make sure you never ever come to the point where you are homeless. If you are someone like me who, pays your own rent and you are not dependent on anybody else, then this is absolutely critical. Like I do not own my own house and I want to make sure that I have enough money in my account to be able to make rent for the next 5 years. And even if my trading is not going well or I don't make a dime out of it, because the last thing I want to do is end up being homeless. And why do I say 5 years of living expenses? Because bear markets can easily last up to 3 years. And during that period, if you're a swing trader like me or a position trader, then your account might just flatline, or you might even be at a dip of 5 to 7%, like I am currently at. So you want to make sure that even if this happens, you are not stressed about anything and you can pay your bills. So remember, like if you're a swing trader, then for your account to take a 5 to 7% dip is a feature, not a bug. It's completely in line with my trading style, my trading philosophy, and my trading rules. So I want to make sure if I'm ever in that situation, and currently I am, it does not cause me any stress and I'm still able to withstand it. Okay. The only exception to this rule is if you have other sources of income, like a spouse, a trust fund, parents are funding you, you're living out of your mom's basement or whatever it is, or you can find a way to minimize your expenses and live a much lower standard of living than you're currently used to and can commit to that for the next few years, then it's okay to reduce this number to whatever makes sense for you. But I hope you get the basic idea behind it and the importance of it. Okay, the next thing is I want you to have realistic expectations if you're going to make it as a full-time trader. Subodh Sharma asked me this question. In today's scenario, is it realistic to target a 0.7 to 1% per day of trading? That itself can transform my life. Is this even realistic? Okay, let's do the math. Let's use our common sense. I went to a daily compounding calculator on Google. I put in a starting value of $10,000 at a 1% rate, compounded daily. And in the next 9 years, the calculator said I would be a gazillionaire. This is so unrealistic and so far out of any model of trading that if you go in with these kinds of expectations, you are bound to be disappointed and in for a rude awakening. Any kind of business that can even give you 0.5% a day or guarantee you 1% even per week is selling you snake oil. This sort of business does not exist. Think about all the successful businesses in the world that you know of. On average, they return 10 to 15% per year. And as a trader, yes, you will make more than that. And I'll get down to exactly what you can expect. But expecting 1% per day is just not doable, at least for my style of trading, which is swing trading or position trading. I think there are a lot of day traders on YouTube who are happy to sell you this dream. But as far as I know, none of them are doing it realistically either. Just think about it. Logically, if they were doing this, they would be billionaires in 3 years. Yes. Or rather 4 years. Yeah, they would have like 7 billion in 4 years. And you would hear about them. But sadly, you've never heard about any of them. So, what is realistic? In terms of returns, for my style of trading again, which is swing trading and position trading, first thing I want you to expect is 5 to 10% drawdowns in choppy markets and bear markets. And rather than telling you the upside first, I would rather tell you the downside first because I want to give you a very realistic picture of what it's going to be like. And remember, bear markets can last up to 3 years. So you could be looking at a drawdown for 1 to 2 to 3 years. And it's not easy staring at a loss in your account for days and years on end. And this is the scenario I currently find myself in. We're in the second year of a bear market, and my account is down around 7% from its peak 2 years ago. Okay, now that you've seen the dark side of what the drawdowns can be like, in a new bull market, you can expect 100% or more returns once you are a good experienced trader and you know what you're doing. And so say, for example, in a market like the 2020 market, or coming off the lows in 2010, 2011, and a few market periods in between, it is not unrealistic to have triple-digit returns. And most swing traders and position traders who trade my style generally do that, including me. Now, in a late stage bull market where the market is going up but not really aggressively, you can expect to have 20 to 30% returns. At least that is what my numbers have been over the last 10 years. And this is while it's not going to be life-changing for you the one particular year, but compounded year over year, these can also move your account in a big way and make a big difference. So ideally, expect your account to look like this going up. Small drawdown, making new highs, a small drawdown, making new highs again. And this is for my style of trading. If you're trading a different strategy or a day trader or a different time frame, your returns could look very, very different. Another thing that I want to point out is what a realistic lifestyle of a full-time trader looks like. Sadly, there is a lot of glorification on YouTube and Twitter of this trader lifestyle with lots of Lambos and islands and vacations and bling. It is nothing like that for a real trader. Trading full-time every single day for a living is pure hard work. Every single day after the market, I have to make sure I do my scanning, my preparation for next day, and I have to be on the desk latest at 8:30 a.m., no matter what else is going on in my life, because the market is not going to stop for me and it's still going to open and my positions are still going to move and I have to be there. That is my job. I get no paid vacation days. If you're in a corporate job, you're going to get at least 4 to 6 weeks of paid vacation leave, and you can just take that off knowing that your paycheck will still come through. No such thing if you're a full-time trader. I don't even get paid sick leave. So even when I had COVID, I was still trading and working because your only two options are to sell all of your positions and get out of the market completely, or still show up and manage your positions. Otherwise, you don't get paid. Next, there is no health insurance. And if you're living in a country like the US, like me, where you absolutely need health insurance or it's going to bankrupt you, you're going to have to buy this yourself or go on your spouse's health insurance if their company gives them one. This can be a huge expense in and of itself. So you should definitely factor this in, especially if you have kids and you need insurance for them too. There is no maternity or paternity leave. So even if you have kids, either you just take a break entirely from trading and shut your shop for a few months without getting paid, or you continue to power through that and trade while raising kids in the first few months, which itself can be a huge challenge. Next, one thing that no one talks about is how lonely it can be at some points. If you're a full-time trader, you're most likely working alone. And yes, we do interact with other traders on Twitter and YouTube, and we meet other traders at conferences and boot camps. But your day-to-day life is going to be spent all alone. And for people who don't like this sort of lifestyle, it can get very lonely. If you're planning to become a full-time trader and trade by yourself, make sure you're someone who can enjoy your own company, or you're okay with the solitude, or you have a very active, thriving social life outside of trading, such as I do, which helps a lot to balance it out. The next is you're going to be working from home. If you're a sole trader trading your own account full time, it's unlikely that you will be going to an office every day or even set up shop at a WeWork. And that is simply because as traders, we need a lot of monitors, we need a lot of privacy. We can't expose our screens and our accounts and our balances to the rest of the world. So you're not likely to be trading from a coffee shop even. And most likely than not, you will have a home office. And a lot of people don't like working from home or have a very inconducive atmosphere in their house for whatever reason. And that can make it very difficult. Also, you must know your friends and family are not going to understand what you do. Most of the people that I know think I am a gambler, or I get a kick out of doing this, or they don't really understand what I'm doing and avoid asking me too many questions about it, or just pretend like I don't have a job, so it's easier that they don't have to question me about this or express their concerns. And 99 out of the 100 people you meet in your life, when they ask you what you do and you tell them you're a full-time trader, are not going to understand what you do. And they're likely going to be concerned about you. And every time the market dips, you're going to get calls saying, hey, I just saw the NASDAQ fall. Are you okay? Is everything okay? Let me know if you need any help, etc., etc. So be aware of that. And to make that even worse, you're not going to have any colleagues. You're going to be working alone. Yes, you'll know traders that you meet eventually through Twitter and YouTube and develop relationships with over time. But these are going to be people who are far and away and who don't work with you in the same physical space, or you don't interact with 24/7 or see them on a daily basis. So it's not going to be the same. And the bottom line is this profession is very unglamorous. For anyone who is selling you the dreams of the Lambos and the bling, real trading is nothing like it. And if you really want to do this, be prepared for a very unglamorous and frankly difficult day-to-day lifestyle. So in the end, I just want to say this. There's a lot of people who ask me, should I become a full-time trader? Oh, I want to become a full-time trader. What's your advice for me? And I want to quote Elon when he was asked this question once. So an interviewer asked him, as an established entrepreneur, what is the number one tip you have for all the young entrepreneurs waiting to start up? And he said, I think it's very difficult to start companies. It's quite painful. A friend of mine has a good phrase for doing a startup. It's like eating glass and staring into the abyss. If you are wired to do it, only then do it, not otherwise. So think of it this way. If you need inspiring words, don't do it. This is exactly what I say to everyone who asks me if they should become a full-time trader or any advice that I have for them, because trading is exactly like starting a company. In fact, it is starting a company. You are running your own trading business, and it is one of the most failure-prone businesses. 95% of the new traders end up losing money and don't make it. It's a very, very, very painful journey, much like eating glass and staring into the abyss. And there are many days that you're going to feel that way. And honestly, unless you have a burning desire to do it, simply don't go for it. When I went full-time too, or for the 8 years that I was hoping and planning to go full-time too, almost everyone I knew told me not to do it. Nobody understood what it was, and everyone deterred me from it. But I had the burning desire, the passion, and I knew that no matter how difficult it gets or how painful the day-to-day life might be, this is what I want to do. And so that was the reason I was able to stick it out, make it through. And 2 years into a bear market where I'm in a drawdown, I'm still able to stick it out and want to keep pushing through and will keep trading for the rest of my life. But unless you feel the same way from within, my last words to you are simply don't do it.